to Actual section on business management. We are looking at this question: state and explain three ways by which Bank of Ghana controls the amount of money in circulation. Kindly take note of this two things: what Bank of Ghana does when they want to reduce the amount of money in supply, and what they do when they want to increase the amount of money in supply. So in each of the points, these two things will pump up. So now let's look at the first two they use, which is bank rate. Bank rate is the minimum rate of interest the central bank charges on loans granted to commercial banks. So now let's look at what they do in order to reduce money in supply. If the Bank of Ghana wants to reduce money in supply, they tend to raise the bank rate in order to discourage commercial banks from borrowing. And in the other way round, if they tend to increase the amount of money in circulation, then they reduce the bank rate in order to encourage the commercial banks from borrowing more. Now, this is the meaning to it. If the commercial banks get loans at high rate, it means that they are also going to charge a high rate to their customers, and their customers in one way or the other may not be motivated to take more. It is only few that will go, and banks or commercial banks will also not be encouraged to give out more. So at the end of the day, we'll have just less money in circulation. And in the other way around, where commercial banks goes or seeks for loan and they are giving loans at less or low interest rate, it means they are also going to charge low interest rate, where their customers will be encouraged to take more loans, and hence we are going to have more money in the economy or more money in circulation. The second tool they use is what we call open market operation. We basically refer to it as OMO. OMO refers to the purchase and sale of bonds and other securities in the open market. Now let's look at what happens here. Now, when the central bank or Bank of Ghana want to reduce the money supply, they sell securities to the commercial banks and the general public. And when they want to increase the amount of money in supply, they rather buy securities from the commercial banks, and that from the commercial banks. Okay, so if they are buying from the commercial bank, it means that we are going to hold money, and the commercial banks will then borrow it as loans to their customers. So we're going to have a lot of money in what? Circulation. Then what are they trying to do? It means that they want us to have more money. Okay, so it means Bank of Ghana is intending to make sure that we have more money in circulation. Okay, but in the situation where they are rather selling the security to us, it means that we are going to give them money and they are keeping the money, so the commercial banks will not have much to give to their customers. So at the end of the day, we are going to have less money in circulation. The last tool they use is what we call the cash ratio. Cash ratio is the minimum percentage of commercial banks deposit. Now, these are minimum requirements that all banks are expected to keep with the central bank. So at the point in time, government increase the minimum requirement, and when government increase the minimum requirement, most of our banks couldn't pay or give out those requirements, and the central bank withdrawn their license. But when we came to, or this outbreak of COVID-19 came, as of Saturday 21st March 2020, according to Business News, government reduced the primary reserve requirement for banks and special deposit deposit institutions from 10% to 8%. Now, they did that in order to make sure that the commercial banks have more money to give out so that they can support the economy. So at the end of the day, they will not have much money being kept with the commercial, with the central bank, sorry, that is the Bank of Ghana. They'll just have little kept there, and some will be kept here for commercial purposes. But if Bank of Ghana tend to increase the cash ratio, that is the minimum requirement, then it means that they are going to keep more of the money at the commercial bank, and then we are going to have just less. They are going to just have less of it, and they are going to give these monies out, and then we are not going to have more in circulation. So that is intended to reduce the amount of money in circulation. Please subscribe to our YouTube page, like it, and share it. Thank you very much.